it is the expectations like something with a very high 4 in front of it, from my understanding, from most folks out there. I believe we could definitely come in with a mid 4 and potentially even a low 4. So, maybe I'm a little too optimistic on that, but I look at the Truflation numbers. If you look at Truflation numbers throughout the month of April, we were either mid 4 or low 4s the entire month of April. So, and we did, I think, I recall the Truflation numbers did hit some 3s here and there throughout the month. So, nonetheless, folks, I think that's impactful. We'll see if obviously it plays out, and Truflation numbers aren't always exact. The Truflation numbers had us at much higher CPI numbers than the Fed ever had us at, or the government ever had us at. They actually had last year us at like 11 and 12% when the government was reporting like 8, 9% numbers. So do keep that in mind. But then you can also look at it and say, well, if they're usually too high when it comes to Truflation numbers, maybe they're too high right now. And so if Truflation was showing like a 4.3 throughout the month, maybe it's lower. I don't know. Okay. But nonetheless, I'm pretty confident we're going to be something with like a mid 4 in front of it. It sounds pretty realistic to me. Here, a lot of these Wall Streeters are talking about, basically kind of waiting around. They're waiting around for clear signals on, where the market's going, right? And they're waiting and they're waiting and they're waiting until we finally get whatever that is, right? As an individual investor, I don't think that's the right mentality to have. You see opportunities in the market, you got to take advantage of those opportunities. You can always take advantage of more opportunities if more opportunities present themselves, right? But these Wall Streeters, they play the game so scared, and that's why they can't even keep up with the market, to be quite honest. Like, look at most of the Wall Streeters. They can't even keep up with the market in terms of market returns because they're playing in such a wait and see approach. You're not a professional if you need to wait and see. That's the bottom line. Think about it, right? Imagine if this is sports, for instance, right? And imagine Tom Brady's like back there getting ready to pass, but he's like, oh, I got to wait for all the guys to get. You can't do that. You're going to get sacked, okay? Imagine it's an NBA player, and he's like, oh, I'm going to wait until see everything, and then I'll shoot the ball. The shot clock's going to run out by that time, right? You can't wait forever and ever and ever. At the end of the day, you've got to take action. You've got to go to where you think things are going and why you think things are going there. Because at the end of the day, the market's going to give a lot of the false flags, I guess we can call it, where it's going to, or a lot of magic tricks where it's going to have you believing something over here, oh, the market's going to crash, or the market's now in skyrocket mode or whatever, and then it does the opposite thing. So it's almost, in my opinion, it's not even a game worth playing. It's not even a game worth playing. Like, focus on your game, focus on, where the puck's going, as Wayne Gretzky said, right? If you ever play quarterback, you got to throw the ball to where the receiver is going to be, not where he's at right now, right? Because he's right there. You need to throw it way out there, right? And so that's the same approach in the market. And, whenever I hear these folks, waiting for confirmation from the market, what does it need to do? Go up another 15% and then you say go in for then it to drop 25%? Like, you know what I mean? It's a silly game, man. Okay, so you need to ultimately see wages going up over time, okay? You can't have wages going up too much or it leads to obviously bad inflation. But at the end of the day, like, let's not confuse this. Wages going up is a good thing. If wages go up too much, that's a bad thing, okay? But you do need wages to go up over time. And you ultimately need wages to outstrip people's expenses, right? And some folks refer to that as real wages, right? Which real wages have been in a really bad spot for 2 years now at this point in time, okay? So you can look at these things as only negative. Oh, wages going up. That's not, almost always that's not a bad thing unless it's out of control, okay? And I don't know if the wage growth was really out of control. I couldn't say that, okay? But the bottom line is you want consumers to make more money over time. Like, would you rather have everybody make $15 an hour for the next, 10 years? Let's say on average, $15 an hour or whatever, $20, let's say $20 an hour. Everybody makes $20 an hour on average for the next 10 years. While everything else goes up in price 1-2% a year? Of course not, right? That's not a situation. You'd rather have a situation where, let's say, wages are going up by, let's say 3% on average a year, 4% on average a year, and you got inflation in the 2 to 3% range, right? That's an ideal situation because you got wages just a little outstripping the rate of inflation overall each and every year. That's perfect scenario, okay, folks? So I thought it was worth addressing, okay? Basically, now that they're starting to talk about we're going to be profitable from here on out, this basically means if them getting into the S&P 500 is now a very realistic possibility. And if you're talking about as each quarter comes and they're profitable again and again and again, they're going to get an S&P 500. And the closer they get to in the S&P 500, the more you're going to see the stock price move up and move up and move up. Why? Because everybody knows the S&P 500 inclusion is coming, which basically means massive amounts of funds have to buy Palantir stock. Not we choose to or choose not to. They have to. All those passive funds that do all this S&P 500 buying all the time, all of a sudden they have to buy Palantir stock. And so you could see an epic move up in Palantir stock price over the next, I would say, 12 to 24 months here based upon S&P 500 inclusion. If they would have came in and reported a quarter that wasn't profitable here, that would have been a very different situation for the stock price. And their revenue beat wouldn't have even mattered. Their stock price would have been down 10 or 20% after hours if they were unprofitable. I'm telling you, this is what matters in a significant way for the stock price in the short term here, okay? Now, let's take it a step further. Let's go a little in-depth nitty-gritty here for a moment, okay? Very important things I have to show you here. Check out the revenue. Revenue came in at $525 million versus $446 million in the same quarter last year. That's a rise of about $79 million, okay? Very impressive in this environment, but here's the best part. Cost of revenue only rose $13 million, okay? I can tell you if Palantir keeps putting together numbers like that, the gross profit is going to go to the moon, okay? Absolutely ridiculous. When you have that level of difference between your revenue and your cost of revenue, your gross profit is off to the races, okay? And that's exactly what we saw happen. $417 million of gross profit for the company versus $351 million in the same quarter last year. Phenomenal. Now, sales in marketing was up substantially year over year, up almost about $27 million roughly, okay? Now, you might look at that as a negative. Oh, they're spending so much. I don't. I have this circle green for a reason. This is great news. Palantir, they have a best-of-breed product. Their products are amazing, okay? What they lack is that sales and marketing team. So if there's one thing this company needs to spend on, it's sales and marketing, okay? They've got to get more deals through. They got to get more clients on 3-year, 5-year, 10-year contracts, more and more and more. It's not for Palantir. Their product has never been a problem. Their product is best of breed. Ask anybody who's an expert in this field. They'll tell you like Palantir's 101. Okay, this is its own league. Okay, and the engineers at that company is phenomenal. So it's not like they need to necessarily spend a fortune more on R&D, okay? And they're not. They're keeping R&D roughly in line. They're just, slightly raising it year over year as far as research and development. This is where they need to really spend on. They need to get massive amounts of clients onto their product, obviously, okay? So that's phenomenal, okay? Obviously, they're continuing to spend R&D, just keep their products at the creme de la creme, the A+ products, and that's great. Love to see that, okay? General administrative, they actually dropped that year over year. That's beautiful, okay? This is flawless execution by Alex Karp. The way this team has turned around this company over the past few quarters has been, in my opinion, it's a historic kind of turn here. Nonetheless, folks, and this is a year that's going to make and break companies, okay? It's going to make and break companies. And we see certain companies that are turning their companies around and getting these ships back on the right tracks, okay? One is obviously Fubo. If you looked at their earnings on Friday, another here is Palantir. They're heading in the right direction. Total operating expenses, in this environment and with sales and marketing going up as much, that's very well done. Okay. Now, here's where things get very interesting, and you've got to pay attention to this. This matters significantly. Look at their interest income. Okay. So their income from operations was about $4.1 million, right? But their interest income was over $20 million. Okay, so that basically means they have a bunch of cash that's somehow yielding them money, and I'll get into that in just a moment, and we'll find out what's going on in their balance sheet here. Okay, and so they're making a fortune off of that now, and so overall it makes them have a positive net income of about $19 million or so here. Okay, now in this higher interest rate environment, their interest income should continue to pour in for quite some time here, nonetheless. Okay, so that's great news. Now, look at this. Stock-based compensation was always so talked about, and it should have been with Palantir, right? This has become less and less and less of an issue. And in terms of total stock-based compensation, obviously down substantially, tens of millions of dollars on a year-over-year basis. So that continues to trend in the right direction here, okay? Now look at this. So big change here in terms of the quarter-over-quarter, okay? They put a bunch of money into marketable securities. Now my guess is they put that into treasury bills. Just a wild guess, okay? So here's the math I did. If they have that money in treasuries bill now at this point in time, they're likely making and it depends on what treasury bills they own, they're likely making $70 million to $100 million a year now in basically, you can call it interest income, whatever you want to call it, okay, from their T-bills and just having a bunch of money there. That's a lot of money, okay? 70 mil to 100 mil, and that money should continue to pour in. And I don't know whether they're in 3-month treasury bills or 6 months or 12 months. Who knows, okay? But if you look at treasury bills, a lot of them have been yielding, look at the past 6 months. Treasury bills have pretty much been yielding 4 to 5%, somewhere in there, okay? So nonetheless, folks, they're making bank from that. Okay, total current assets come in at $3.2 billion versus just over $3 billion in this on the previous quarter. Okay, total assets almost $3.7 billion in total assets. This versus total liabilities of $879 million. I love that. Total current liabilities $601 million versus $3.2 billion. Total current assets. Okay, so their balance sheet is an incredible place. Total stockholder equity of over $2.7 billion, okay? Extremely, extremely, extremely impressive, right?